Hello everyone and welcome to the Capital Stack by Yardi. In this video series, we dive into the latest market trends in real estate with a practical take on how software can or already is helping investment managers oversee and grow their capital stack. In today's edition, we're going to focus on investor tax reporting and that relationship that it has with the accounting processes and systems used to track both accounting and tax reporting. Joining us today is Scott and Tom from RSM. RSM is a leading middle market accounting, tax, and consulting firm serving the real estate investor and fund manager community. Known for their deep industry specialization and integrated approach, RSM helps clients streamline operations, navigate regulatory complexity, and enhance reporting transparency across the investment lifecycle, including our topic, investor tax reporting. Scott and Tom, can you guys start by introducing yourselves and your roles at the firm?
Hi, Jace. Thank you for having us. I'm Scott Helberg. I'm a tax partner from Chicago. I work with real estate clients who invest in a variety of asset types, and I particularly specialize with real estate funds and REITs. I'm also an industry analyst for RSM, so I work with our chief economist to develop middle market insights focusing on economic, business, and digital trends in real estate. We really appreciate the valuable relationship we've built with Yardi over these past few years, with successful SaaS and consulting agreements. And so, along with being a sponsor at the Yardi conference that we've done the last couple of years, we're also really enjoying continuing to collaborate on market strategies and identifying value add opportunities with our mutual clients. So it's been a really good experience and happy to kind of talk more on what's going on from a digital front today. I'll pass it over to Tom.
Thanks, Scott. Thanks, Jace. Thanks for having us. So I'm Tom Silversmith. I'm a senior manager in our National Tax Digital Services practice. Based out of New York, I specialize in designing and implementing tax technologies for our clients here at RSM. I have a diverse industry background, but I've focused the majority of my career in serving the real estate industry. Client structures that I serve are real estate funds, both open-ended, closed-ended, REITs, tenancies in common, Delaware statutory trusts. And I'm really excited to be here to talk to you about one of my favorite topics, tax technology and integration with accounting systems.
Great. Well, thanks guys again for joining us. Really excited to have you bring your expertise and RSM's expertise into the conversation here today. So just to introduce the topic a little bit further, we're going to talk about tax and accounting systems and the relationships between them and how that can help, our mutual clients, the industry. So for those listening, tell me if you've heard this story before, right? You close your books for the year, your accounting books, you have to extract that accounting data somehow, probably Excel files, PDFs, etc., send it to your CPA firm. They come back with a bunch of well-placed questions, right? Detailed questions about pulling apart the books and looking at it from a tax reporting standpoint. And then as the accounting firm or as the owners, I have to go back and pull my accounting ledger back apart and get back to the answer to the CPA, right? And after all this back and forth, I'm ready just to pull my hair out at the end of the day. And it can create a stressful and kind of a brutal tax reporting season, right? And we hear many of our clients go through this at Yardi. So, very common amongst our investment managers, and what leads myself and Scott and Tom to today's discussion is how can we really hone in on bringing those two worlds together, right? The tax reporting and the accounting systems to make that a more seamless process, whether it's during tax season or what I would say better, really throughout the year, right? How do we improve our processes and systems so we're preparing ourselves for a very, seamless or as seamless as possible tax reporting season at the end of the year? So, what kind of information do we need to feed across systems? What does the tax preparer need from the accounting teams, the owners of the assets and properties? Ultimately producing, of course, K-1s, investor tax documents, and then getting those tax documents out to investors. So that's really kind of the backbone and focus of our conversation today. And Scott, I want to turn to you first with our first question here and, kind of think about from the accounting side of things, what are some of the gotchas that you would advise and talk to your clients about to be mindful of when it comes to the accounting system and their usage of their accounting reporting?
Sure. So as tax preparers, we run into all sorts of issues with clients' accounting software. The common problems we often see involve missed transactions, typos, or even wrong categorization due to bad software setup or not using all of the features that they can. There's also reconciliation headaches, like accounts don't match up or transactions are just unrecorded. And sometimes we even see that the accounting software doesn't play well with other financial tools. So that can mess up importing and exporting of data or productions of reports. So what we find is fixing these problems and being upfront with it can make your financial reporting better and then makes the tax prep easier on our end. So getting that software set up right, keeping good documentation, and managing your finances well help cut down on those mistakes. At the end of the day, when we get quality and detailed financials, this leads to a quicker turnaround of tax return and a lower cost for our clients.
Right. So setting up that accounting system is just so important in the proper way. And I think there's a lot of components, and this is of course what, myself and my team at Yardi focus on a lot, is setting up the accounting system with our clients. There's so many factors involved in that. One of the things that we talk about a lot, one of the first things we talk about with our clients is what are your investment vehicle structures, right? Because that's going to be a big determining and driving factor of how you want to set up the accounting system. So let's dig into that a little bit further, maybe Scott, from your perspective, what are some key implications on the accounting system in terms of how your vehicle structures are built?
So when a real estate manager is setting up their fund structure, it's very important they involve their legal counsel and tax advisor early on. There's a lot of factors to consider with structuring. Things like your investment strategy. What types of investors are you targeting? How big of a fund are you looking to grow? And also, what cost flexibility do you have? And once you've figured out that structure, you have to make sure it's properly set up in the accounting system to meet all future needs. That can lead to systems that boost transparency by ensuring accurate recording and reporting of transactions and valuations. And that's key for regulatory compliance, but also keeping your investors happy. It also makes fund management easier, right? Because you're able to automate some routine tasks, improve efficiency, and manage your costs better. Good risk management is also crucial because accounting systems can help you identify, measure, and reduce financial risks by tracking key metrics and putting risk mitigation strategies in place. The type of real estate fund you have, whether that's closed-end, open-end, or maybe you even have a REIT in your structure, affects what's needed from those systems. Closed-end funds need systems that can handle capital calls and liquidations. If you have an open-end fund, maybe you need one to make sure you can handle those continuous share transactions and the ins and outs of what can happen from your investors. And if you have a REIT in place, there are special requirements related to income and asset testing, income distribution, and particular tax reporting. So overall, accounting systems play a vital role in running real estate funds to make sure they operate smoothly and make sure that everything aligns within the fund structure and that aligns with the strategic goals of the manager to optimize performance and, again, keep investors satisfied.
Yeah, thanks, Scott, for that. Like I said, we definitely see this all the time. Of the first questions we ask implementation of the accounting system is, what are your fund structures? What are your REIT structures, et cetera? And because that can determine how you're going to implement the accounting system. You can't just sort of dive in. Even starting with the chart of accounts, you first want to understand the structures first. So thanks for that, Scott. And I want to shift gears a little bit here. Tom, you've been patiently waiting. So let's talk a little bit about systems, right? I often talk to clients about integrating the accounting systems with banks and treasury systems. But when it comes to tax preparation, it seems to always be, we just dump some reports out of Yardi and we send it to our CPA. So I want to talk a little bit, Tom, from your perspective, how does RSM think about this relationship between the tax and the accounting system, you guys being on the tax side, of course, and what does sort of the future look like for RSM and how you're thinking about this?
No, absolutely. Yeah, and we view accounting systems often as the backbone of our tax systems. Personally, I love analogies. Scott likes to tease me about my nerdy analogies, but we are all accountants and we have to just embrace it. But I like to envision your accounting system as almost a master timeline, a foundation of everything that we do in tax. And if you think about all the different functions within tax, they are different branches of your source, which is your accounting system. That's federal tax, state and local tax, international tax. And then within those functions, it gets even more granular. Sales and use tax, gross rents tax. The possibilities are endless. And at RSM, we leverage our tax digital ecosystem powered by AI and automation to bridge accounting systems like Yardi Voyager into our proprietary applications. The best example that I can think of a seamless transition from accounting to tax is with our proprietary application partner site. PartnerSight is our industry-leading tiering allocation tool that streamlines the processing of tax documents. So, for example, you can go very seamlessly from accounting systems straight through to tax reporting to your investors. Furthermore, you could push to a Yardi investor portal. So having one all integrated system not only benefits practitioners, it also benefits stakeholders greatly. And our firm views accounting systems integrating with tax systems no longer as a nice to have item. It's essentially becoming a standard across all industries, and specifically, not just specific to real estate.
Yeah, no, I think it's a great evolution of the industry and of technology's use, right? And to sort of de-silo the two sides of the equation. Can you speak, Tom, maybe what are some specific identified friction points that you guys, as you built out PartnerSight and some of their systems, what were the identified friction points that you were looking to solve for, and how do you guys solve for those?
Yeah. The first one is what I like to call the follow-on approach. Essentially, as you change your accounting systems, updates to your GLs, booking entries, allowing that upfront investment and integrating your tax system with your accounting systems allows tax to follow books. So when you think about that, you think about different treatments of different financial accounting concepts versus how it's treated for tax. So when you are integrating those systems, you are streamlining the process and allowing free flow of data within your tax ecosystem. Another pain point is something that tax practitioners deal with constantly. It's one of our biggest challenges in tax season. We've gone through the entire process of completing a tax return, and we're on our fourth version of our final trial balance. So the other challenge that we solve for with integration of systems here is essentially, final TBs coming to us multiple times throughout the process. A tax professional can go through the entirety of the tax return cycle, completing all of our entries, doing, all of our K1s, our K3s. With an integrated system, it allows for free flowing of tax data from the accounting system to the tax system, where it's no longer a manual rework of your process. And then finally, something that we can all relate to across financial accounting and tax accounting is the alleviation of the compression challenges. As we are all aware of, there's talent crisis in the accounting industry, and having more automated processes and eliminating the manual efforts in our day-to-day leads to a streamlined process.
Yeah, some clear and evident benefits definitely to the overall process. And one of the sort of philosophies we think of a lot when we build software at Yardi is it's the scalability, right? It's not necessarily replacing human capital in your ecosystem, your org chart, but how can software help you, take your portfolio to a 50%, 100% growth, whatever it is, without having to grow your staff equal to that. And it sounds like you guys are kind of in line with that as well, right? How do you scale effectively and efficiently across the organization? Yeah, thanks, Tom, for the introduction of your guys' solutions and some of those friction points. It's nice to see very specific things that you guys have focused on and are solving for. Are there any areas within those solutions that your clients directly interact and directly get benefit from the solution? So obviously you guys have efficiencies in your preparation, but how do your clients interact with that?
Yeah, I mean, our focus has always been that our clients should stick to what they're able to do best and let their accounting systems and tax functions run smoothly in the background. Nowadays, linking these systems is key for hassle-free financial management, and this combination allows for a data flow that is automated. It saves time on data entry, it trims human errors, and it keeps the information consistent to one source of truth. And so this allows businesses to make the most of their resources, save on compliance costs, and boost productivity. And then what does that mean? It means that we're able to meet tax deadlines, right? That tax compliance function becomes a breeze, and there's no more frustration with delays or penalties. And so keeping that data consistent across platforms is really, really important, because that means that you have accurate financial reporting, and you're also going to be able to maintain trust with your key stakeholders or investors.
Yeah, that continuity is so important, right? Where your accounting system says this, your tax system says this, and if they don't equal up, that's potentially a big problem. Yeah. Tom, sorry, you're gonna add something?
No, that's spot on. Having synergy between our accounting and compliance systems, tax compliance systems, not only is a tax compliance benefit, it also is a benefit for the business side as well. I mentioned follow approaches from a tax standpoint. A lot of times tax is left in the dust when we're making major business decisions, and having integrations of accounting softwares and tax softwares allows the tax answer to be surfaced much quicker. And you're no longer finding out about, what the tax liability would be a year down the road after you've closed the transaction. You could surface those insights in real time. And that's another really great benefit of integration of systems. It's not just on the compliance, it's across the board.
Sure, absolutely. Well, thanks guys for that. Just to maybe quickly summarize here before we move forward. So, efficiency in the process and the time it takes to perform these actions, from the accountants on our mutual client side, you guys as the CPA firm, the tax team, investor reporting team, right? I think these are all things that you see a speed up effect on, right? Getting ultimately those reports out to investors faster. So winners all around, right? Which leads to happy investors, happy clients for all of us. The access to the accounting tax information. I think, Tom, it's really interesting what you guys are building with the system and letting your clients get insight into that is really, really powerful, right? Because historically it's maybe hidden in the PDFs or what they would get as an output for K1s and whatnot. But to have the insight into that data, I think is really powerful. And, with RSM in particular, I've had a great time preparing for this event, this session with you guys, and kind of understanding how your technology and services are really coming together. And I think that's a trend we'll continue to see in the market across the board. And just really excited to have had you guys here today, and appreciate your time that, we can work together, Scott, as you said, as partners in helping our mutual clients where everybody wins. I want to transition really briefly to finish off our video here for today to my colleague, Alex Lewis, who's going to talk to us a little bit more of the practical take on the Yardi side, the accounting system, right? So what are some of the tools and how can we use those in Yardi to help a lot of the conversation that we were talking about here today? Alex.
Hey, thanks, Jace. Appreciate that. So I want to start here first and foremost with this fund that I'm managing inside investment accounting. Kind of allows me to consolidate all the information around the fund itself by organizing all the entities in a structural hierarchy. So all the properties through the LLCs and the holding companies need to consolidate up to the fund or organize in the system through something we call commitment records. So if I want to look at a property's commitment and structure, we're committed inside of the system through a record. And the roll-up rules that we've defined inside of here hold the methodologies we need to track. So full consolidation versus an equity pickup, for example, are all organized in the system like you see here. And we can kind of look at this through the perspective of a full consolidation from the properties up, meaning I have the ability to go into a financial report for this particular fund, roll up all the financial information, including multiple sets of books in the system, meaning the accruals, eliminations, and the consolidated accrual books of the properties and holding companies up to the fund in one place to give me a very clear and concise consolidated report. I can also drill into the report for the investor itself to display their structural hierarchy and the accounts they're associated with. I can see the contributions and distributions and most importantly, the income allocations that have been consolidated up and allocated from this fund to each investor in their subledger. And then once we've completed that process, we make it easy to get this out to an investor portal that looks something like this for them to consume anytime they feel it's appropriate. Drilling down into a particular deal, fund, or partnership that they're interested in, and consuming this data 24/7.